Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Hey, Marty, as usual, thanks for stepping up. How we doing in YouTube? Yeah, thank you, Chris. Well, good morning, everybody. We have a lot to discuss today. Always, is every day, isn't the market interesting? I think that might be part of it because we never know what we're going to get. But if you have a structured plan and you understand market mechanics, which is the purpose of this stream, the business of trading, you might at times be able to get an alignment. And the purpose of the stream is to help you understand the integration of Bookmap Orderflow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. In addition, the Trader Lab is a group of like-minded traders with all varieties of processes, methodology that have come together to leverage their collective experience. It's for newer developing traders to seasoned traders, and the full range exists. Senior trader has over 50 years. I've got 45 years of trading, both professionally and now out here with you. And along the way, during those 45 years, I've probably done most of what everybody else has done. It's part of a journey or development that we all go through. And one of the problems we have is we think this business might be a bit different than what it really is. It is not a let's get certain. There's no certainty. It is not confirmation biased. All of those are psychological impediments to actually operating in this environment. And I go into that in Trader Lab. And the idea of Trader Lab is if you've been there, you've already done it. So maybe what you're doing does not have a statistical edge. If you're using random inputs, in other words, multiple indicators and of course multiple time frame, and your focus is on certainty, unfortunately, that doesn't exist. And yet we can spend years trying to create certainty because of randomness. Randomness gives us winners in spite of it all. So when we see winners, we think it's just, let's make it better. Isn't that what you think? That's what I thought. And I went as far as to say, well, maybe if I optimize, and many of you who just tweak your indicators, that's an attempt for optimization. And let's use the other analogy to optimization, curve fitting. Well, I did that, of course. When I started in 1980, indicators were kind of a new thing, you know. So well, it was very exciting. So, and then I said, wow, if I built a trading system, and I was developing Money Manager at that time. So I thought if I systematized it, it would kind of just spit out, buy, sell, put your stop here, whatever. And I did it across a number of asset classes because as a money manager, you're trading everything, So, it kept breaking down. So I had a regular schedule of re-optimization, and that was take a bunch of data in the past, optimize it so it fits, and all the stats look great, and then do something called walk-forward testing. And then assume, because it was optimized, that the market would repeat itself and that those trades would work. Well, everything kept decaying. So I was constantly doing this. And at the time, there was really not a lot of literature available on these issues, So I was really at the front end of these processes because, and I'm just saying is the computers were new. They were a new thing, when I was doing this. Initially, when I started, there was no internet, no PCs. So I'm just saying is I was there very early. So I didn't understand the pitfalls, and I actually got to experience them. But as retail traders, we're really doing the same thing in many different ways. We see random outcomes in a random environment, and we think that if we make it better, it's going to be better. I did a webinar on that called Trader Groundhog Day. And if you're like many other retail traders, you can spend your developing career never making progress, but waking up in the same place. This is one of the reasons why Trader Lab exists. And you're all invited to Trader Lab. There is no cost. And if you're in YouTube, there is a link. Now let's get into today. And thanks again for visiting the lab. Hope you get something from this. And remember, the Trader Lab community is available to everyone. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. It is based on structured trades. In fact, there's 60 PDFs that are available exclusively to Bookmap Discord Trader Lab participants, as well as a library of webinars on this process, and even live narration that has been recorded up to 5 hours long. So if you want to see this as it unfolds, those are available exclusively in the library. So let's go. Let's go and hold on. Now, I'm going to talk about some, grab your pen and paper. I'm going to give you some statistics. Always nice to have statistics. Why do we want statistics? We want edge. Trading is not a predictive business. If you're trying to predict so you can, quote, be right, you're on the wrong track, in my opinion. We cannot predict anything. And the comparison I always make, and this is just the way it is casinos. They cannot control a lot of the elements, the cards coming out of the deck or how gamblers play the cards. They're in a completely random environment, and so are we. Uncertainty at every moment. And of course, our human nature is to try to overcome uncertainty and create certainty. Unfortunately, it doesn't exist. So we have to change our focus from creating certainty to creating probability. And that's what structured trades are about that I share in the Trader Lab. And of course, every trader develops, takes these templates that I've created and then reverse engineers them and finds where they fit in line with their psychology. So if we use a casino as a successful business model, they only play games that have a statistical edge. In other words, call them setups, but they're games over there. For us, we're overlaying what we do on that model, but ours are structured trades. So they're still games in a way, but they're structured so we can also participate like the casinos do. And remember, the casinos pay the gamblers and give you the ticket to the buffet and the cocktail. So in a way, we're going to be paying the gamblers too, right? And that's called overhead and cost of production. Can you reframe the way you see it? Think about it. Does this make sense, guys? Hope so. All right, let's get to Bookmap. Let's see what's happening. But before we do that, one more little thing, I think. Hold on. This is called, and this is a higher time frame chart, and this is the volume profile. Now, before you run in the other way, in the other direction with your hair on fire, all this is showing the distribution of volume and price. So these are RTH candles, and that's all it is. Now this, from here to here, this little box is a distribution, and all it is swing high to swing low. So you had this is the outcome of the election, breakaway gap, and then we go up into this range and we rotate. When we break out of this range, we come down and we start a new rotation. Yesterday, now previous day, this is NVIDIA earnings, and one of our traders in the Trader Lab, Slaughter-Razi, clued us in on a report and how important this was. You'll notice some pieces. Now I'm going to show you two of these, but I'm going to show you this one. This orange line is called the microcomposite volume point of control. Let's just translate that. The retail price, the highest volume in here where most of the business took place was right there. So what happens? We open here, we test it. Think shopping. If this is too high, we can leave it. You notice what happened here. And what do? We break out the bottom. All the longs in this consolidation get thrown under the bus. Thanks for playing. This is where your broker sends you a gift basket. Then we gap, breakaway gap, and we come down here. What's down here? And you guys remember, as you followed the stream, this was a target on this day coming down. You'll notice where we go. Why? If this is too low and that is too high, if we reject that, then this is support. This is kind of how the profile works. Now, the other part about the profile is it does it in all fractals and time frames. So we can get inside it and see the same behavior. When I get into order flow and Bookmap, we're going to be discussing the same behavior in microstructures or fractals. So once you understand market mechanics, you can take these concepts and break them down into any quote time frame. Now let's come back here. Too low, inside day. What's up here? Buy stops over these two highs, sell stops under here. What happens on this day? We go down, take out the longs, sell stops, and test this price. Too low, reversal, come up here. Next day, we have an inside day, and it looks like we're going to fall out the bottom. That was my trade plan for here. So it was short, and then we get this reversal. Who knows? By the way, remember, no prediction. We don't know. The volume point of control in this consolidation is actually right there. It's covered up by the green line, high volume. And what did we do yesterday? Come down? Who knows? This was a target yesterday, 59.20. You can always review the stream. That stream I made public. And then we get this. Breakout to the upside. 60 was a target. This was a target. Test back into the range. And if we come out the top, 04 is a target. Now, there's more. What might we do today? Here's the statistics, and now I'm going to take you. I'm just going to show you one other chart. Same chart. It's just cleaner. There's the high volume. There's the high volume. This is a target for today if we get continuation. This was 59.70-ish. That's retail from yesterday. Retail from this day. So what the market tends to do, it'll check what's too low, check this price. It did it yesterday. This is yesterday's high volume. We're moving higher. Yesterday's high with this close is on the hip parade. And if we continue, it's here. If not, we fall back inside because it's Friday and you're going to get longs evening up. I hope that makes sense. Now there's one more piece, and then I'm going to get the Bookmap. This red line is called a composite low volume node. These are called micro composites. In other words, intermediate time frame. Okay. In the higher time frame, this is the same thing. So what it's showing, since this is all-time highs in here, all the volume. Now this is doing the same thing. But if we had more volume going back for how many years you want to look at, if we were inside of previous ranges, this would measure all the volume. So you see a distribution here. So this is outside edge, which is down here, outside edge. High volume is right there. Remember, it aligns with that. Retail, it's too high. And this is too high. Then I'm down here. I can come back and check this, come out the top, or never. So let's go the other way. The dividing line is right here. It's called a low volume node. So think of it this way. Too high, too low, too high, too low. Break down here. Too low, too high, too low, too high. Breakout. Now I'm in this low volume area. Fill it in. That's the possibility. And it can still do anything. That's not the intraday. But this is showing you all the volume. So if there's more volume over here, which there is, which I can't show you, it's off the chart, that's included in this. I hope that makes sense. So this is like your high time frame, intermediate time frame. Now let's go down to the developing daily time frame. I hope this is valuable. Now, let's look. Yesterday's settlement, RTH open, that naked volume point of control, the highest volume from yesterday. I spend time with this because I got to show you how this is called fractals. So this is the naked volume point of control from yesterday, and then there's yesterday's high. So we're skewed to the upside. And remember, on Friday, after you have a run like this, what might happen? Called squaring up for the weekend, right? So RTH open. That's that high volume node between the two major distributions. This was yesterday's highest volume. This was a settlement. ETH high, which becomes a target. Actually, there's statistics. I'm not going to spend time on them because I already did spend time. Yesterday's high, wherever that went. Oh, there it is. Somewhere. Lost it. It's a target there. Over an 80% probability we'll get either yesterday's high or low. I don't know about you. I'm leaning there. High volume node and this, the 04 target. If we come out the top, 04. If we come out the bottom, there's more. Overnight mid, that statistic is still open. ETH low, maybe. Microcomposite VPOC, 20. All these are possible. We can take out yesterday's low. We can do anything. Our job is not to predict. Overnight volume point of control. Let me just throw a number or two at you here. Now we'll move right on because we don't have time. Taking out either the first hour's high or low is a 97% probability. And you got to vet these for yourself. Taking out the previous high or low, 85% probability. Taking out the overnight volume point of control, this is the highest volume from the retail, is about 83% probability. Taking out the overnight mid, 83% probability. That one's still open. And we have the IB high or low. And remember, it can take out either. However, in this situation on a Friday, this. And then from there, you wear a helmet. And it can take out either one or both, though the probability is not high to take out both. So initially, I'm looking for it to take this one out and get there. If that doesn't happen, we can come out here, squeeze out the longs, and then come back in or just keep going. That's what we know. If you're in TraderLab, that is what you know. The thrill is we don't know what, when, how, where. If you have questions, please post them. Thanks for your patience. Now, RTH open, I'm going to show you the first trades. These are structured trades. Now, when I say structured, I'm only talking about what you can do, and then you take what you learn and you craft it into your time frame. We have traders in TraderLab that'll put a trade on and get in the Barca Lounger and have a mint julep. Other traders are actively trading rotations. Everybody finds their sweet spot that aligns with their psychology. And if you don't think psychology is an issue for us as mere mortals, it is the biggest one. I believe if anyone comes to TraderLab and they do the work, they can learn how to trade. Will they be able to trade? Different question, isn't it? Now let's watch. This is the open, RTH open, right there. I'm in the middle of that low volume area. I have a high probability statistic here. This was my retail price from yesterday. I have the ETH high close, which has that high probability, and I have yesterday's high. So what are the possibilities? If we open and drive, then we have statistics, this and above, and we have the possibility that if we open and get a rotation, that we might get profit taking, and then this is the opening swing low. Let's mark that. What's the opening swing low? Does anybody give that any consideration? If we have a leg that is long, put your answer there. There's no right or wrong, but there's only, what's at the opening swing low? How about YouTube? By the way, if you're getting something out of this, please give a thumb up, a like, stops. What's under here? These longs have sell stops here. Now there's another piece. This is called a variable high volume node. Now let me explain this. And I am going to try to move along, but I got to take you into call it the basics of the auction. This is a language, so I don't use indicators. I always want to mention that. I have no indicators that I use in my trading. I use order flow and I use the auction. Now, the difference between, what is an indicator anyway? It's a translator. You know, Google Translate, right? So most retail traders start out with indicators because they get a software package. It has 150, God knows what's in there. First question is why? are there so many? And the other part of it is it's lagging, conflicted, and you're going to continually be tuning and tweaking and curve fitting them because they don't align with the transitions and context in the market. So when I'm doing this, I have taken it to a level where it's a foreign language or a musical instrument, and I'm reading it. So my indicator is between my ears, basically. I'm translating, and I'm using the order flow so I have timely execution, and I understand what creates this. An indicator is just looking at something, measuring it, and goes, oh, it's going up. There's a buy. If I'm getting long, I'm going to activate here if it's part of my trade plan. So I see my buyers, and I'm looking for longs. I don't have a long. And I'm going, you know what I'm going. You know what I'm saying. No comment. So I get VPOC migration. Let's follow the yellow brick road. This is saying at the moment that, and this is showing you all the volume in here. This is only showing me the volume as it develops starting for today. So it starts at 0 volume, and this yellow line is the developing volume. So as price and volume move, it's going to shift with the volume. So it's very important because think of this like it is what I showed you in the higher time frame. Shopping. If this is too low, now the traders or the buyers and sellers, the shoppers, are going to pay this. If it's too high, we're going to come back maybe and check this or take out these stops. And then if we cross back above it, you'll see. Watch. So right here, I want to get long. I have no entry because I'm sitting here. And now emotionally, I'm going to talk about how I feel. And you see how you feel. What do you feel when this happens? FOMO, right? I feel FOMO. Why wouldn't you? I have a high probability statistic here, and I have yesterday's high over 80% probability. Why wouldn't I be losing my mind? And feeling urgency. So this is my variable high volume node. And I know, let's go back. There's stops here. And I have two-sided trade. So what does it say? Let's speak the language of the market together. Follow the yellow brick road is what I call this. Buyers, right here, what's happening here? Buyers, the limit order book. What's happening here? Sellers, what happened here? Buyers, break high, support, microstructure. What's over here? Buyers, no, I don't know. Could break low, break high, micro support. Sellers here, what happens to them? We don't take these buyers out. They are absorbed. This is order flow. Now watch. Now I don't know anything until after the fact, so there's no clairvoyance here. Still working on that. And it's not something you can take to the bank, in my opinion. So I'm looking at structure. This right here is an event. The possibilities are the following. If this is too low, I can continue higher. This yellow line is a, quote, fractal or higher time frame, if you will, if you want to use time. And this is not based on time, so I don't use time frames, but most retail traders think of time frames. The market doesn't care about the clock. What it cares about is the participant behavior, the buyers and the sellers. I get my sellers here. We don't take out these passive buyers. They are absorbed by the buyers, and now we go higher. So right here, it looks like, you know, we're going here, okay? And I'm going, darn it, among other things, because I want the long because of my statistic. And you remember the statistic. I know you wrote this down. Over 90% probability I'm going to take out either the ETH or low. See? So this is my trade, and I'm not on it. So right here, I see the break below retail. I see these buyers now were absorbed. And I don't know it until I'm below them and I'm below this seller. And I'm below these buyers, which are here and here. VPOC migration. I'm going to label it. Just follow very closely. I know this is micro, and you may not find this useful, but this is the auction. And the auction gets you where the rubber meets the road, and you combine it with order flow. So interpreting buyer and seller behavior, which is the order flow, and then overlaying it on the mechanics of the auction. So I'm going up in time frame as you guys think about it. So this is too low. And right now, maybe too high. How do I know it's too high? Because if I pull back and I can't get past here and continue, I'm going to rotate down and go after the guys that are long here. Let's see what it does. Watch. Where's my opening swing low? Here. This is a dangerous place to trade. Now, I post all of this in Trader Lab. I got to tell you, I was like a whirling dervish this morning. Let me just show you what Trader Lab is, and then I'll continue right along. But I narrate when I can. I don't call trades because you don't want to take my stops. We all kind of step up and do our own. But I do loads of posting in here. Scenarios. You have to look at possibility of inside days. If not, why? There's all kinds of stuff in here. And other traders posting. Reserve the auction. We tested the HVN. You know, all of this stuff. If you're not getting this kind of insight and being in a supportive community, the idea of Trader Lab is to leverage the collective experience of all. Conditional narrative helps you recognize change. Then the structure helps you see the reversal triggers. We must remember all that market moves directionally and then into fractals. It can go into mean reversion. I'll show you what that is. So directional, too high. Where's the stops? Opening swing low. This is why it's on the chart. What do I want to see? If we're going to go higher, and I have my statistic, don't forget, I want longs. This is a reprieve for me. And this break below here says, put your helmet on, do not get long. Now, this was the retail price when we opened. This was a price that was too low. But the momentum of the market, there's the sell stops. This is the stop and iceberg detector. So what I did, after we picked these guys, I call it a stop pick. Right there. See it? Boom. And this is something I call stop divergence. This is stop an iceberg detector. I don't have time to go into all this, but it's in those webinars. There's a library of them in the Bookmap Discord Trader Lab community. This 49 stops. This is the only thing I use from indicator days. You know, divergence. What is the divergence? Well, I've got sellers here. This is the delta. Delta is made up of aggressors and stops. 28 stops here, buying icebergs. Pac-Man, they're eating the icebergs up. I get a buyer here, microstructure. I retrace up to VWAP in mid. What's next on the hit parade? If I don't take out the opening swing low, and now this is not a trade recommendation, but it's possible, and you pull back the VWAP in mid, and you know the opening swing low has stops, might you, if there's enough range, subject to your trade plan, this is not necessarily a structured trade, it's just market mechanics, sell this for the opening swing low. Or, let me give you the or you see this, you know it's resistance, you know the stops are here, and you don't do anything because you can't do anything until you come under here. Now you come under here, you get a bounce, and now you're looking for a triggering structure. Here is the microstructure. I'm going to take you down into fractals. Follow the yellow brick road. If you have questions, post them. Now, I'm showing you microstructure. What I am doing is I am using the auction in all time frames and fractals. Look at this here. You see the microstructure? Let me just show it to you up here. And then I'm going to remove this just so we keep this. Chop, chop, chop is a micro consolidation. Break high is a trigger in the Trader Lab. Now, I'm not showing you a long. I'm showing you behavior. There's the test. This is like your store down the street. Little store. Sellers are there. Passive buyers are here. Buyers take over right here, break out of this volume. The high volume structure, think of this like an auction, and this is called mean reversion. We're reverting back to the mean or the high volume, and then we break up. That's a buy trigger, isolated trigger. It's not a long, it's a buy trigger. So when I see this and this, I know I don't want to get long because I haven't taken out my stops. I'm giving you a lengthy explanation. Now I come back here. What is this? VWAP in mid. what might you get at the VWAP and mid? Sellers. Okay, then what? Selling icebergs, and then I break low. Now I got my stops out at the opening swing low, and I have my stop divergence. I'm going to remove this. I just want to show you some microstructure. Hope you're getting something out of this. Now, I come down, and what do I see? Right here, I have not gotten my stops yet. Why? By the way, why would it stop here? Here's something to think about. If you were short, and this could be a short if you're a counter trend trader, this is all subject to your trade management. But I don't have, this is actually a short, but let's just say it's not, because you might want to get long because of statistics and probabilities. See, subject to trade plan. So here is the microstructure. I break low. Now I got my stops. Here's my stop divergence. Lower price, less stops. Everybody tracking. Divergence. Now watch. VPOC migration. What does this tell me? By the way, this is showing you all the volume on the screen, but this is actually starting at 8:30. Now I'm only in, how long am I in here with these trades? Hold on. I'm going to show you the long. Remember, this is not a long. This is structure. That's a retracement structure. This is a short structure. I didn't narrate it because I didn't take it, and I wouldn't take it. Here's my long. So I see this. I get VPOC migration. Now let's look at the difference. By the way, this is an advanced trading process. This is not what most retail traders do. I will suggest to you, many of the professional traders I know use this kind of process. I work with Quant, a hedge fund manager who managed over $1 billion. This is what he uses. Something to think about. So many retail traders do not even understand this because they go down indicator path, which unfortunately they may run out of time and dollars before they understand that maybe they don't have an edge with it. And I'm not saying you can't have an edge with it. I never got one out of it. Yet I had runs of tremendous success with it, and then it would break down. Trader Groundhog Day. So anyway, chop, VPOC migration. Look at the difference. VPOC migrates up, break down. VPOC migrates down, break up. See it? So when I saw, and I'm looking for this, and right here is my micro high volume structure. Break here, pull back. Notice the test. What did I show you up here? Here, I mean. Break high, notice the test. Up. What about here? Break low, break high, and this is nuanced. You might not do it. Right here, shift down. Two possibilities. South of the border or north. Because of the stats, I'm going for yesterday's high, the overnight high. Long-winded explanation. But this is what trade plan is. So it's a long, and I didn't get long here. I got long here. My stop's under here. This is my target to scale. Why? Because I rejected it. It's now resistance. There, where am I going? Here, watch. This is a scale. I'm right ahead of it. So longs, scale, or you don't scale here because the context is up and this is your scale. All that's up to you in your trade plan. And there's more. Yesterday's high, target. Let's watch it now. This is Trader Lab traded. Yesterday's high. Now there's more. By the way, questions, I apologize for taking so long, but I want you to see how this works. If you learn this and you want to trade ranges, and you could trade anything you want, this is a potential long. Pull back to the high. Look where we come. microstructure. It's right there, long, up. Where do we pull back? I'm not going to keep drawing all these lines, but you'll kind of see it. Here, high volume node. Let me just throw it in here. Over here, high volume. Every time you see one of these green lines, I'm just marking these lines. High volume is here. Now, there's another thing I mentioned in TraderLab that I want to talk to you about. Now, there's over a 90% probability. Remember, we take out either the first hour's high or low. And of course, I don't know. It's not my job. So we're not in the business of predicting. We're in the business of maybe. This was our upside target. Remember 04? And the market never has to get there. So let's look. Now, questions. I'm going to show you some other stuff. Let me see where the stuff is so I can remember. Okay, 78. And this is all posted in TraderLab. This is called a low volume node. And if you remember, let me just get this so you can see it better. How does this work? The market gets directional and then it gets rotational. 78 right here is what's called a low volume node. I'm going to explain what it is very briefly here. The market goes directional, and then if we rotate, we can come back outside. And it's a change in the condition of the market. This is the outside edge of this. Now remember in the higher time, and so we basically auctioned this too high, too low, too high, too low, and then left it. Boom, right there. So this is a consolidation down here. And then you get this thing. Well, that leaves low volume. Now here's what happens at low volume. If the market retraces, it goes into a condition called mean reversion. And there's two locations here. I'm going to put this one up here too. And you see on the right side, it gives you the number of contracts. That's the volume. Very important. Because if there's low volume, it's created by urgency. The market doesn't stay. So up in here, you'll notice that, boom, the market tested there and then accelerated up. So that is urgency. This rip creates the low volume. Now, there's another piece to this. At these outside edges, like out here, the low volume, what do we have? It's stops. So we know there's going to be stops out here. We also know if we slip through all this, there can be stops out here. So these are called distributions or balance. So I can come out here, I can come out here, and it could do anything. So I know the market is directional. Now, the thing is, and you'd learn this in TraderLab, that's why it's an advanced. This is an advanced program for traders that, want an advanced process and not to do with what other retail traders do. And this doesn't mean you'll be successful. It does mean it'll change your thinking and your understanding of what this really is, in my opinion. It might not be right for you, and that doesn't mean you're going to succeed, of course. There's a lot of impediments to being successful. Most of them are psychological. But in TraderLab, there are methods and methodology to deal with that. The impulses, the fight and flight, the FOMO, the chemicals in your brain. You don't have control over yourself under certain stimulus because there's a reptilian brain in there under the hood that is going to disrupt your intentionality. It's not about willpower. It's about knowledge and understanding yourself and having tools. Micro high volume structure. Who knows? Let's just watch. Here, micro high volume structure. Same thing. Look at this. Now, I can't pick the high or low. It's not my job, so I can't do it. Let's watch. VPOC migration. Going to the moon, Alice. But what do you see? Breaks low. What does that tell us? South. Where's the last variable high volume node? Right now, it's right here. Let's watch. So what I do is I'm tracking these distributions because it's pricing. What is the market trying to do? What's it worth? I don't know. What do you think? I don't know. Should we pay it up here? I'm not paying that. And we leave. Now, the retail price in the developing time frame, remember, I'm trading fractals, so it's multiple time frames. I don't use time. When I break below this, Now this is too high. Now we have structured trades in TraderLab. Let me explain. The next structured trade, assuming we're going higher, is called VWAP to VPOC. It's a structured trade in mid. And this is where this trade would fail. So here's the following thing. If I get this here, I see a stop sweep and I see sellers here. If I get along here, I'm going there. That's number one. And if I go here, I have the possibility to come out the top, keep going. Also, if I get along here and it fails, I'm going to take a stop. Is anything new? Everybody takes stops. So watch this. Right here, I put a long on here, and I'm looking for this. Watch. And I take, watch. Right there. Put it on. It was here. So for me, the entry was, remember, microstructure, too high, break high, absorption here, location, location, think real estate, and my stop is under here by 2 to 3 ticks, not here. Why? Think about this. This is absorption. Sell stops coming out. Thanks for playing. You got icebergs absorbing, and I see the sweep. All this is bullish in my world. However, if I get long here or here or here or here, wherever it is, my stop cannot be here. Why? If we rotate down and take out this 96 sell stops, which are the guys who got long here, I can't put my stop. Now, here's the other reason. If we come down here and these buyers who are willing to pay for it here see it on sale, they'll be activated again and they'll get long here. That's why I don't put my stop there. I hope you get something out of it. So this is my long. Now this is called, and where's my low volume node? I posted this in TraderLab. This is location. The market has changed from a directional context or trade plan to a up trade plan and an outside in mean reversion plan inside of it. Plan inside of a plan. When the context changes, you pull out a different plan if you're in TraderLab. And this is the location and it's called mean reversion. Where's the mean? There. So the goal of this trade is to get long in this area and come back here and then out the top or wherever it goes, it goes. There's your target. There's your scale. Let's watch. Now we have to clear this. So this is the long. This is a TraderLab structured trade, and you're looking for it to come out here. Take out the high of the day. Stops are sitting here. Let's see what it does. Too high. And there's no way to know, by the way. So don't think about it. So we know the long is here. We know the scale is here. And at this point, we're looking for it. What are we looking for it to do? You ask. Here. So on this trade, my next target was this. These are trades I take, and these are TraderLab trades. And of course, what I do and other TraderLab participants do is really not material. Now, I'm going to show you something very nuanced. I hope you're getting something out of this. We're not even in a half hour yet. Watch. Now, and again, the fact we get a counter rotation is not a reason for me, again, me, to exit the trade. I have to look, right, as an example. Micro high volume, break high. This is now micro support. I'm just going to show it to you very easily and craftedly. Support. Why? Buyers are here. Sellers took a shot here. They got absorbed by the buyers, the buyers, the buyers. The buyers were here. The buyers are there. The buyers are there. The buyers are there. The buyers are there. The sellers are here. The sellers are here. The sellers are here. Sellers are here. Sellers are there under the bus. Break high. Support. Support. See where it comes back. The buyers are here because the buyers were there. The sellers are here because these buyers were absorbed. So the sellers are here. The buyers are there. We break below this microstructure. Now, it's not necessarily actionable. It's informational. And subject to the fractal you trade in, you would understand that This is support. This is resistance. Buyers are here. Buyers, 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 buyers going to the moon, right? What happened here? Sellers are here. Sellers are here. Sellers are here. And we don't know what will happen. I do know sellers were here and buyers are here. Uh-oh. Warning, Will Robinson moment. Now what? Watch. VPOC migration. See if this doesn't look familiar. Highest retail price. We're either going to do that or this. This now becomes potential resistance. Let's mark it together. I hope you're following this. Now, I know I'm taking my time, right? I'm showing you auction. I'm showing you how to trade without indicators. There is an indicator. It's the participants. So I'm right here right now. I'm going, okay, what happened here? Absorption. How do I know there's absorption? Pac-Man. Buyers. Why didn't it go up? Who are the buyers? Buy stops. They're not initiating, but they show up as delta. And then the passive side is over here. You can't see them, except you see the reaction. That's order flow. So now I know sellers are here. Buy stops came out. No buying above it. Warning, warning, warning. Support is here. I can just come here and come out. Instead, I come here and I break down. VPOC migration. I'm either going to bump this way or break this way. If I don't get back above here, down we go. Support. Resistance. Resistance. Just watch. See? Now, I can't. Now, for me, there's no short. What there is for me is time to get out of Dodge. So my long, since I'm not fading this, because I have statistics on the upside, I'm only taking longs, my trade plan. And when I say take longs, I'm also managing my longs. So when I see a sell in this context, I'm not necessarily going to short. What I'm going to do is I'm going to exit. So this sets up a short, which for me is an exit. So out. Okay. And then down we go. And it's like, what's going on? Now I have, remember, what's under this low volume area now? Stops. Let's watch it. VPOC migration. Here's your micro high volume structure. It's back where the LVN was. Let's look. So everybody's going south of the border. So what do we have here? I'm going to mark the little high volume node just so you can see the structure. I don't do this while I'm trading. I'm doing this for you. Chop, 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 break high, resistance, trigger, pullback, potential short. Up to you. Chop, 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 break high, support, resistance. What's below me? Stops. Subject to your plan, potential short. Where are we going to go now, you ask? Where's our statistics? Overnight volume point of control. And I'm going to move on very quickly now, but I'm going to look at your questions. What's the statistic on this thing? 83.5% probability here. So once again, I'm coming down. So I took this short. And the reason, and I didn't take it here. I exited my long here, and then I'm looking for a pullback. But I have my structure. Now, this might be a little advanced. You don't need to be doing any of this. But here's my structure. Now, I get VPOC migration. I still have my stat open down here. Let me show you another short. Trigger, short. This is now too high. This comes down here. What is this? VWAP to VPOC. What was this? VWAP to VPOC. What is this? VWAP to VPOC. Scale, and then going for the low. See it? Short, taking the longs out. Two-sided trade. It's like wear a helmet. And down we come. 83% probability, I think I said, whatever it is, to take this out. Next target. So this is a short in the Trader Lab. Is everybody tracking? Now, I'm not sure if I got more for you. Anyway, that's as far as I traded, you know. So that was it for me, and I haven't seen the rest of this. Let me see if you have questions. How are you guys doing? Um, Pedro, answer your question. The resting liquidity, I align with liquidity. In fact, this is Trader Map Lite. Um, so it takes the algos out, so I can just see what's material. Notice where the liquidity is sitting here and here. Now I don't have my levels on here, so I can't comment that. But I keep this up so I can see the real liquidity, not that bracketing algo. Um, Now this is interesting. Look what's sitting here at 70. Make sure this is all accurate. Notice where the variable high volume node was, resting liquidity. This is in alignment with this. Coming down here is resting liquidity. It's in alignment. So you definitely want to be using Trader Map Lite. So when I have liquidity here, and this is, you can see this is the algos in here. They add, pull, and you can't let yourself be fooled. The thing about this is it's the resting liquidity that is material. So if you're, and we have structured trades for this, using liquidity, and there's more, of course. There's 60 PDFs of these structured trades in TraderLab, and you guys are all welcome. Notice how they're pulling. So we want to see the behavior here. The thing with liquidity is you don't know the intent of liquidity. See how they canceled? This is the icebergs. So what you had was icebergs sitting here, limit orders, and then they pulled them. This is like opening the hatch, potentially. I always got to say potentially because I don't know. Somebody could jump right in right here and disrupt this. This suggests we're going higher. That's why you need an order flow tool. And also you got to learn how to use it. It's like any other tool. And this is a high tier tool. It is not red bubble, green bubble. That is not what this is. This is aggressor. And then what happens on the other side? Because wherever you see delta, there's another side in here. There's the passive side. So this is delta is aggressors, market orders. Stops become market orders. So you see the aggressor, but you don't see the other side. And this is resting liquidity. That is part of the other side. The rest of it is the limit order book. So these guys are here. And what you can get is limit orders being peppered in here, like, like one at a time or two, whatever. And you won't see them in the book because they're executing right, at the moment. Computers do that. That's algos. So a lot of this you have to kind of interpret, and that takes practice, and this is what we do in Trader Lab, plus a lot of other education that's available, and it's all at no cost in the Bookmap Discord server, including the Trader Lab community, and specifically, this process. So you can learn this. And I believe anybody can learn this, but it's like learning to speak a foreign language. And it's quite foreign if you've been using indicators, So you want to watch this, but they pulled, so potentially we'll have continuation. It doesn't mean we won't counter rotate because there is no way to predict anything. But let's look what happened here. High volume is here. I'm going to put a little line in. Volume was here, right here. And we rotated down. So I got my volume. Why did I put it there? It should be there. Actually, I do want to. So this is a microstructure. Chop, 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 triggering structure. And it happened here. Let me open this up so we can isolate this thing. You see this high volume right here? So look at it this way. You had your liquidity here. Now I'm in this Trader Map Lite, don't forget. And right here, I have micro high volume. This. So, and I don't know. I'm looking at this and I'm as clueless as everybody else. Don't think I'm not. Anybody who says they know anything is full of baloney, because what we do know is what might happen. We can't predict what will happen. And then we can identify locations of potential behavior. So what this is a consolidation. Let's just look at it. And if you bracket this behavior, you'll see this. Micro high volume is up there. This is the volume in this structure. So I look at this as resistance. And if I go back here, I've got another high volume structure right below it, right there. So this is showing me what is this? A trigger. Now it's not a long, it's market structure. What is this? An auction. It's a consolidation. If I break high, support. If I chop here and test this, resistance. Support, resistance. What is the trend? Up. Where am I trying to go? Oh, wrong chart. But you know what I'm saying, right? Support, resistance, support, and I have a probability of taking this out. Remember my target above, not recommendations, this. So for me, at this point, longs only. I can use these structures for trade management. And I have over a 90% probability to take out either the first hour's high or low. And considering where we are, we already lambasted the longs, right? Then it's long. We're over yesterday's high. We have over 90% probability to take this out, and that's our target. This is Trader Lab trading. I hope you're getting something out of it. Now, is it crazy? The market's random. Can't predict anything. So in Trader Lab, it's not about prediction, it's about alignment. And we all take stops, so we got to get over it. Casinos pay to gamblers, overhead and cost of production. If it's a personal failure and you're emotionally attached, you're in the wrong business. You need to either learn to manage that or you're not suitable for this. And I hope that isn't what you want to hear. You can learn how to manage it, though, in Trader Lab. That's the thing. We have tools. I had the same experience as you. FOMO, bailing out, moving the stop, skipping the trades. Take a stop on the last trade. Don't take the next trade. Why? I'm still in the past. I'm not in the present. All of these are common to human beings. And it's not about you. It's about understanding why most retail traders fail. And you can learn that too. So if you understand why retail traders fail, maybe the thing to do is think like a retail trader, but don't act like one. You have to anticipate behavior to participate. We don't predict it. We anticipate where something might happen. We anticipate probabilities. That's why I start the stream with the idea of edge and that this is a casino or gaming process. My edge and my statistics suggest up. My auction, which is the basis of what I do, suggests this was too high last time we were up here. What does the market do in a shopping environment, which is what we are in? It comes back and checks pricing. What did we do in the ETH? We came down and checked pricing, which was the ETH. Too low? What am I going to do? Come back across and potentially check pricing. That's how this works. And it can do anything. It never has to get here. It can do whatever it's going to do. That's not the point. The point is the job of the market is to try to figure out what's too high, what's too low, and then in fractals, in other words, going down in time frame, these are quote the daily or RTH candles or time frame. This is the last price that we rejected. I'm not paying that. We're out of here. Now we're coming back. We took out this high. What's next? Now remember, it doesn't have to get there. That's where trade management comes in. There. So for me, out the first hour's high, not a recommendation, over 90% probability, and then this. Why? It's too high. Do we want to be sure? Let's go back to the store. Is this still too high? And here's what it'll set up. Now, for me, considering what happened over here, we had a lot of support here. Couldn't take these sell stops out. Here's a note for you for the future. While the market can do anything and we can make new all-time highs, it's not about that. There's tons of sell stops under here. If we reject and fall back in here, I would suggest that you consider that if we get under here, we can have a substantial move to the downside. Just put that in the back of your head. Questions? And how do I think I answered at the top of the stream. I did, in fact, how to draw the micro composites. So if that question can be answered, just review the stream. And it's only available in Trader Lab. These streams are exclusive to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, add to your library of examples of specific trades. The job of trading is not a video game. It is a statistical game, if you will. If you want to play a game, play a video game. This is a business. If you want to be in the business of trading, you got to think of it like a business, like the casinos do. They don't make up games because they're bored. They wait for the gamblers to come to the table, and they only play games that have an edge. And then over a random distribution of outcomes, they extract their dollars from the gamblers. Every time I take these trades, I take the same trade, or, based on my plan, which is not necessarily the best plan there is. It's just mine. Other traders do this exact process a completely different way in different fractals and time frames. Or they use indicators once they understand market mechanics. The idea of an indicator is most retail traders get it backwards. They use the indicator as the primary input. Imagine if you understood how the market works. Then you would know which indicator applies at certain times and certain conditions. That might help you. Or like me, you might just throw them all away because of the conflict and ambiguity. Blackjack is always played the same way. When you have multiple indicators, multiple time frames, and you're trying to fit the spaghetti together so you get a red light, green light, it's not consistent. When you have maybe 5 things and you say, well, I got RSI, I got a MACD, I got a Keltner channel, I got a Fibonacci, I'm using an Elliott wave. Sometimes it's like a smorgasbord. How do you measure that? How about this? You can't. When you're in a random environment with random inputs, it creates chaos. In other words, there's an old saying from the computer world, which has probably been forgotten. Garbage in, garbage out, right? Well, in trading, garbage in, garbage out. So I did a primer webinar on this. It's got over 30,000 views, and it's posted in the Trader Lab. It's the concept. It's the understanding. You need to understand the business you're in, and then you can then re-engineer and reverse engineer what I've shared in Trader Lab and make it your own. And you only need one structured trade for the light bulb to go off, for you to see that there's method and process to this. We're in a random environment. We cannot be random also. We need to be anchored, so otherwise we can't measure it. If you anchor it and you take the same trade under the same conditions based on your plan, and which is vetted, that means it has a positive expectancy. Over time, even though it's all uncertain and random, and you will pay the gamblers, over time you extract the dollars from the gamblers. That's how a casino operates. We're in the same business. That's it. It's not more complicated than that. It is random. So you need to understand randomness and uncertainty and manage your fear. How do you manage your fear? Statistics. How do you aim the boat in a certain direction? Statistics. How do you know how the market works? The auction. How do you know what might happen? The auction. How do you know what will happen? You don't. Does that make sense? Yeah, Nick, congratulations. Null 0. Did you get your answer to these microcomposites? It's at the top of the stream. If you grab the link in YouTube, you might be able to watch it again over the weekend. I don't know. I typically don't. These are really exclusive for the Trader Lab. I'm not a vendor, there's no cost for this. Yet, in order not to waste your time, you really need to be in the community because this is probably different than most of you think. In other words, it's a different process. And the other thing is, I have taken this process and customized it, made it, because when I first learned this, it was from the guy who created Market Profile, Peter Stottlemyre, and I learned it in the mid '80s. I couldn't trade with it. And I'll tell you what part of it was because I had spent so many years on indicators that I had my indicators and I put this. Now, it wasn't this, it was the Market Profile, which is a time-based process, but it's the same thing. This is a derivative of that. But I learned to think differently. And the Market Profile was a problem for me because it was time-based. And as the technology evolved, I evolved. And I started seeing things, and other market profile and profile traders told me it was rubbish, you know. And part of that has to do with beliefs. If someone believes what they're doing is correct, they're going to keep doing it. That's very hard for us because I know myself when I was using indicators, I believed I was doing the right thing. I wasn't going to change. And then there's that thing that goes through your head that says, well, look, I've invested so much time in this, there must be something good to get out of it. What I ended up doing was using multiple processes and creating conflict and inconsistency. Now, the market is inconsistent. Why would I want to be inconsistent? That's exponential chaos. Does that make sense? So I had to throw something away. And unfortunately, all those years I spent with Fibonacci and extensions and retracement, and I went way deep into like fibs, time cycles, Fibonacci time cycles. So I was doing it with cycles of time. I mean, I went so far. Elliott wave, combining, I'm just going to say, it's so much. And I even worked with Ralph and Bill Cruz, Omega Research, when they were developing what became TradeStation. So I was writing systems and stuff in quote easy language, which is step on a rake. But I'm just saying is I have a pretty diverse background, not only managing dollars, in my own company, but doing it for other firms. I had my own company. So I have a very diverse background, but it doesn't mean that my experience is any different than yours. It just took me longer because there was no information. Now you guys have a different problem. You got too much information. Everybody's an expert. You go out on YouTube, it's, the one indicator, we all get sucked in by that, snake oil, chat rooms. And it's, well, there's value out there, of course. I'm always going to say there's good and there's bad. How do you differentiate? And how many of you have paid good dollars and when you walk out the door, when you're done, you got nothing for it? It's a common thing. It's called snake oil. And snake oil's been around as long as snakes. And again, I'm not disparaging all of them because there's some value and there's some really good guys out there. But I would say the majority are just content creators with a price tag. Now, I'm not against anything. I'm saying is you got to look in the mirror and ask yourself, are you developing or are you waking up with Trader Groundhog Day, running in a circle, always waking up at the same place? And watch the stream that I did in the video. It's in the Trader Lab on Trader Groundhog Day. And when I'm talking here, I'm talking about me because I'm the same as you. I've just been doing it going on 45 years. So I've got more experience and regretfully a slower learning curve and being stuck in Trader Groundhog Day. Anyway, I hope you get something out of that. And I hope you're getting something out of this stream. We were quite rotational, aren't we? So we have a low volume node out here. So we want to see how we behave in here. So let's see. Now, where are their stops? Under here, under this swing. So remember, you don't rush in. And this is not a trade recommendation. All we've got going here is two-sided trade. And it's quite annoying. So what you need to be doing with this, if you're long, trade management, your job is not to try to hit the ball out of the park. Your job is just to trade and accept what the market offers. I understand, myself, I want to go, my target, I have a high probability of taking this out and going north. I also got an equal probability of taking the first hour's low out. What do I know? It could do either. You're going, oh, that's great. And I'm going to say, yeah, that's trading. The other part of it is that it's Friday and the market is long. We can still come out the bottom. I'm inclined to trade for the top because we already took out the bottom. And I tested this level, which was the retail price in the ETH, too low. I'm still leaning north, but it doesn't mean the market won't fall out the bottom because it's Friday. Is that making sense? Yeah. So I'm inclined. Where's my outside edge? It's out here. This is a dangerous place. Why? Mid. What's mid? You got to look left. Stops are sitting under this swing. So for me, if I get long here, my teeth are going to chatter. So I got absorption here, right at the mid. And I'm not a big fan because, and watch, I've got an outside edge here. So this is a potential mean reversion trade. Let's just see how it develops. And if I fall out of here, my next high volume is here. So I can pop this. And now I'm going to watch. And this is not a trade recommendation. And I'm going to remind you guys, I probe the market. I take stops. Very excited about it. Let's look. High volume structure here. High volume structure here. Resistance. I'm just going to start putting these in here. High volume structure here. Support. Watch. Resistance. High volume structure right in here. Right here. So this green line, if the trade works, it'd be coming here. And again, not a trade recommendation. I'm just hanging out with you. We're all visiting. Let's all get in our Barca loungers and hang out and observe the market together. I consider this a dangerous trade because of the stops. I am quite okay not taking this trade. Or, because where can I enter this trade? Here, and my stop has to be under here with everybody else. I'm not a fan of that. My preference, and this is not a recommendation, it's just the way I think, is to get the stops out and then get a structure and then get long. And then I'm going to be looking for that. This is a mean reversion trade. Now, here's something else about this. What you're seeing is how I anticipate behavior. And you're also going to see if it doesn't fit my plan, I don't take the trade. I don't have FOMO. I experience and feel FOMO. You're always going to have the emotional triggers because that's that reptilian thing going on. Can't stop it. I tried for years to stop feeling. In other words, and actually my role model was Spock. Spock. And because he had no emotions, I wanted to be emotionless and just be detached. I couldn't do it. And I spent years trying to squash these emotions because I never learned early on that emotions are chemically stimulated and we don't control them. So I've created a little name for this, Jekyll and Hyde. Jekyll is the scientist. You heard the story, Jekyll and Hyde. Jekyll's the scientist, intentional, analytical, calm, professional. Hyde is the lunatic, uncontrolled emotional states. You see this behavior? Now, because of this, I would not take this. But this is a trade. But I don't have what I need here. But you can see structure. See, the thing about the auction is you would know this if you're in TraderLab. You might not have a trade, but you would know it to here. And why would we be going long? Statistic. Target. Is this all making sense to you guys? And I don't call trades. Now, the point is, what I do, what you do, is all individual. If you understand order flow and you see the absorption here, that is your micro support. It's here. This is a trigger. And then this, there's two plates. Let me show you this in micro. I want to show you this. Now, I have to be very careful in the stream because, I have had traders, think that I'm calling a trade, and I don't. Let's look at this hypothetically. You see the sellers, you see a buying iceberg, you see the stops coming out. Thanks for playing. And we have the mid, which makes me not like it. This is the micro high volume. Absorption is here. And now I'm in the order flow. The buyers consume this guy and we break out. Now we have what you guys think of as a breakout. Where is the low volume? Watch. So this is by absorption, no clue, right? Sellers are here. Right now, it looks like it's going to zero. When I break high and I'm over this consolidation right here, it sets up a long. Now, I can't buy it here because that's where my scale would be. Where does it pull back? Notice here. What is that? Outside edge. It's right there. So this is a consolidation. Bing, 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 bing. Break, trigger, pullback. To here. That's the VWAP, I believe. Yes, and the mid is here. So this could be a long, and your stop would have to be out here. Is that within your wheelhouse? 2 points. And by the time you get, now what I do, so you know what I do, and I should say what I do is not so important. What I suggest for Trader Lab participants is they use limit orders on entry. And here's why. And it's hard for us to do because of FOMO. In other words, you see this, you're going to buy that. Well, look at your risk. How about if you did this? Once you understand and you see the trigger, you have two possibilities. You can put a limit order here, one tick above, or you can put a limit order there, either one, up to you, and your stop has to go below this, not at it, below. Because all we might do is come up here, rotate down, take the stops out under here, and then you get your buyers. So the way I think of this is, if I put the trade on and I get stopped out and the trade is still good, I just got popped, I just put it back on again. And if I take two stops on the same trade, then I'm going to be disturbed and I'm going to wait. That's it. So this is a viable long, but you would be buying it here, stop under here, or you won't have a trade. I'm telling you, it's all subject to your plan. Your resistance is here for the scale. Right there. See the behavior? There you are. Does this make sense? This is Trader Lab. Now, I'm not saying you should do this. I have no clue. And where am I trying to go? Remember, over 90% probability, not a recommendation, clueless, and there. So these have been the targets all day. And it doesn't mean it'll ever get there. It's just targets based on the auction. And what are we doing? We're trading the auction. Questions? I don't have much time left, so if you have any questions, it's a good time. Remember, if you're visiting in YouTube, there's a link in the bottom of YouTube. If you want to visit the Bookmap Discard Trader Lab community, it is a community of like-minded traders, all different approaches that have come together to leverage their collective experience. This takes a team effort. We're talking about statistics, sharing trade plans, structured trades that I have shared that you can vet, and building and understanding the business and getting an emotional management, psychological, understanding the psychology of trading and the problems that it creates, because it is problematic. As human beings, mere mortals, this is like being on a different planet compared to what's in the outside world. We never can work in an uncertain environment without being emotionally triggered with fear because of uncertainty. Our primal wiring that helped us survive as a species, if you accept this concept, kept us from the saber-toothed tiger and what's behind the rock. We go the other way. This is the same thing. We're running into the burning building. Our wiring says, no, don't do that, right? Don't cross against a red light. You might get run over, typically, hopefully, or don't drive through the red light because of uncertainty. We don't do it. Anything else? What do we not do? Now, not in a continual environment of uncertainty, you see. So you know where we're going, right? So I hope this is making sense. This is Trader Lab processes. And again, I don't call trades because, why? What good does that do you? So if you can learn to understand how the market works, why it does what it does, how to integrate order flow using a high tier tool like Bookmap, I think it's going to potentially give you an edge. Then it's coming to Trader Lab, joining a community of serious traders. It is not romper room. This is the real deal. This is what's going on. And you can use the link there. Remember Gladiator in the opening battle. You must narrate. Stay with it. Stay with it. Narrate. Per your trade plan and fractal. Sellers are getting absorbed around this area. So you see how everybody is supporting each other? Levels are shared. Trades are shared. Conversation. What's going on? I see this. You see that. And there's no cost. So anyway, Trader Lab. Guys, you're all welcome. No cost. I'm not a vendor. You won't be solicited, but you do have to confirm your Discord username and email. Helmets for everybody. Yeah. You think you might benefit by being in Trader Lab? Manage your trades. Don't gamble unless you have an additional runner that you can lose. Your main dollars should be locked per your plan for potential high tier reports. This is primary reports PMI. Anticipate high PMI in 3 minutes. So this is it. So this is Trader Lab. If you're interested in Trader Lab, use the link in the bottom of YouTube. Also, please give a thumb up. This is the primer webinar. It's got over 30,000 views. This will give you a high-level overview of what this is all about. Bookmap asked me, if I would do this. And I have to tell you, I do it because I reflect back on what happened to me in my development. I mean, we're talking years and years. These are my settings in Bookmap. This is that higher time frame chart that I shared at the top of the stream. All this is posted, on Trader Lab. This is the Boomer Post reports and higher time frame charts. There's repeat is NQ if you're doing the NQ. If as Dirty Harry says, do you feel lucky? And other traders are posting. This is great. Big Tuna posts his trade plan and all the trades he took. Circles and arrows, narration. Are you getting that kind of support? I don't think so. Anyway, lots of stuff. So if you're interested in this, come to Trader Lab. That's all I can tell you. Remember where we're going. Are you guys getting some of this? If you're in YouTube, I'd really appreciate a like, a thumb up, and leave comments. Zoltan, how do we know that the price will break out of this range? We don't. Nick, the funded trader series for this week? No, there is no link for that. You might see it later. By later, I mean maybe next week or the week after. It might be posted. It'll be posted in YouTube, but it is exclusively for Bookmap Discord participants. It was only in Discord, but eventually they'll release it. So keep an eye out for it. The streams that I do are available exclusively also to Bookmap Discord Trader Lab participants, typically only for 24 hours. This one will be available through the weekend. Otherwise, they're exclusive. When there's no cost for something, I guess everybody has to make an investment. Because when you watch these streams, if traders don't understand what is really going on here, then it's just going to be noise. The Trader Lab is really a community of traders that want to be in the business. And my focus is, since I've been in the business going on 45 years, or it is already 45 years, I don't even remember now. I've been in the business. So after going through all the things I went through, why should you guys do the same thing? We all walk in the same shoes. It's a matter, do you want to keep walking in those shoes, or maybe you want to jump ahead? And that doesn't mean you'll be successful if you do anything. It doesn't matter what you're doing in trading because of the psychological impediments. Now, I have a personal opinion, and that doesn't mean, and I have to say past performance, not indicative of future results. I can teach anybody how to trade because I've made this and simplified it. We think the answer lies in complexity. That's human nature. It's got to be complicated. Guys, it's not complicated. What it is random. That's where we have a problem. So randomness and continual uncertainty is not an environment that we can operate in without tremendous conflict. And that's why that emotional triggering is constantly happening to you and to me. The way you manage that is you come to a community that understands the business of trading. And then you really got, if you're not successful, now I'm assuming you're having, you're inconsistent, you're up, down, sideways. Everybody has winning trades, not the issue. If you're not consistent, then you're going to lose. It's just over what time frame, how long. And if you, even though you're working hard, if you're not getting traction other than intermittent up, down, sideways, then you're just gambling. And every gambler has runs of wins. But in the end, the house is extracting the dollars from the gamblers. So the question was, are we going to break out? Statistically, it says yes. Randomly, no clue. What do you guys think? Are we going to fulfill the over 90% probability in a market that's going up? Are we going to go up because we tested the high volume price from the ETH and it was too low? Shopping. Oh, it's on sale. We buy it. What does that tell us? Now, it tells us maybe. But if we can't take out the first hour's low and we can't get below here, we don't get to the overnight mid, which is also a high probability. And now, even though we're rotational, we are going higher. What do you think? Me? If I was long, I'd be managing my trade. I'd be targeting this, and this would be another target. So I'd be subject to where I get in. If I was long, it's get risk neutral, another scale, and then manage the trade and come here. We know there's shorts in the market, and we know there's buy stops here. So yes, coming out the top, I always like to use the term maybe because it's uncertain and also statistically high probability. And then here, all day, this has been what I've been trading towards. Other than a short to take, I think we had one or two shorts, I don't remember. For me, the bias is long. Other than the short to take down to here, right? Then it's back on the train long. Final questions, guys. And thanks for visiting the Trader Lab. Solheim, in the Discord, first of all, click the link in the bottom of YouTube, and anybody else visiting in YouTube, there's no cost. Visit the Trader Lab. There's loads of examples, and I even gave examples and explanations at the top of this stream. So if you missed the beginning of the stream, it's all there. Now, but this stream is available exclusively, and the other streams I do a lot of streams. They're not out in the public. They're specifically for Trader Lab. I figure if it's a no-cost community, traders should invest in understanding what they're going to look at, and also invest in themselves and come to the community. Also, if you're a successful trader, bring what you do to the community. Everybody does. It's all about, it's almost, what we're doing is we're leveraging the collective experience so we all get better. One thing about the business of trading, you're never done. I do replays, I do practice, I give this continual thought. I always want to enter a tick better, squeeze an extra tick here and there, over thousands of trades. It is material. Thanks for visiting Trader Lab. Don't forget to give a like on the way out. Appreciate you guys stopping by. Remember, if you're interested, these are what the structured trades look like, actual trades and also screenshots. I did these a number of years ago. It shows you some of these structured trades, and this was a basic blueprint. There's a lot more nuance and advanced processes that you can learn in TraderLab. But everybody has to start somewhere. And there's a lot of information in TraderLab, and other traders will help you. That's why it's a community. Please give the thumb up. Use the link in the bottom of YouTube. Remember, there's no cost. I look forward to seeing you in the TraderLab. And thanks so much for visiting. And I'll see you guys in the lab. Look forward to meeting you there. Have a super weekend. And remember, this stream's exclusively for Bookmap Discord TraderLab participants. It'll be available over the weekend for TraderLabbers to screenshot, circle arrow, reverse engineer the structured trades, compare it to what you did today, see how close you got, or if you were making errors because you got myopic. This is how we all have to work together and improve. And that's the TraderLab. Thanks again, guys. Have a super weekend. Look forward to seeing you soon.